All right. Good afternoon, everybody. Um, Good afternoon. It is August 17th, 2022. It is just afternoon here in New York. Um, let's get right to it. Today, we are noticing that the market is having a bit of a sell off. Um, as expected. This is something that we've been looking at for a while. We've actually been talking about this, um, although we were a little bit early in our uh, put buying. We saw clear signs that the inflation trade may be coming back. TIP TLT. This is the key. This really was the key right here. It's the inflation protected Treasury ETF divided by the long-term Treasury ETF. All right. We had a breakout, it back tested it, and now it's coming back again. All right. Usually it tracks DBC very well. DBC on this day of the breakout, DBC, which is the broad-based commodity ETF, made a higher high on its chart. And now it looks like DBC is also trying to make a higher low, and possibly we see it coming up again. I do think that certain commodities like gasoline have made their lows for the year. All right, although it doesn't seem like it, but I do think that after this, I think it will come back up. Maybe it might come back lower after maybe October, November, but I do see a possibility of this coming up. All right. Gasoline, that's gasoline. What about oil? Oil just keeps going down though. So this is the only thing that kind of holds me back on the on being too bullish on gasoline, is that crude just made a lower low. So we'll see. Nat gas, on the other hand, I believe is up. Oh, it was up. It was up before I started the video, maybe like an hour or two ago. But, it's coming back down again. Okay. Will it come back down and form a new low? Not sure. Is this like a triple top? Could be. Or maybe we just back off a bit and then keep going up again. Again, I wouldn't be surprised if we see 10. I mean, we were so close. We were so close to 10. I wouldn't be surprised if we get over it, especially with all this heat going on. I talked about this yesterday. We're having record heat here in the U.S. Some of that, we talked about this last week and the week before. It's part of our thesis for our meat play, for PPC and for Tyson. With more calves going out to slaughter because farmers don't want to pay for the hay and the water costs because of this drought. So because of that heat, there is an extra demand for electricity to power all those air conditioners. So if that heat continues, we could see this go up. Okay, a lot of people are looking for signs that the heat is going to ease off in the weather reports. We shall see if that happens or not. No one can predict the weather that far ahead. Okay, so that's natural gas. Let's look at some of the other commodities. Corn. All right, corn is having an update. It looks like it wants to make a higher low and then keep going up. All right, they did in the U.S. they did downgrade a lot of the quality of the corn. There's less corn now that is higher quality. I think it was like 60-something% if I recall correctly. I'm gonna have to find those reports again. I'll try to post them on our Discord. But yeah, they lowered a certain area. The quality of the corn in this certain area, so it dropped the high quality amount to 60-something%, which is low. So I think from that, that was announced like a week or so ago. And I think in anticipation of that, and with all this heat, I think we've seen corn stop its downfall, and we're seeing it kind of now do a new uptrend. Okay, it made a higher high, higher low, so we'll see if that continues. All right, wheat. There's been some news about the shipment of wheat from Ukraine finally moving its way into other parts of the world, into the Middle East and Africa. So perhaps that is the news that's sending this down. I'm not sure. I know that wheat is very much it's the grain that moves the most with the news. Ever since Russia, ever since the whole Russia and Ukraine conflict, it has been the most news sensitive of the grains. All right. So for me, that's a hands off. I'm not gonna touch wheat. Soy, very similar to corn. Not as bullish though. If I am getting into a trade in grains, I will be doing it in corn. Remember, we talked about the corn trade back in June, and I said that corn probably is not going to revisit these levels unless we have some major weather related risk event. This heat could be that. It could be that. We'll see. We'll see. If the corn crop doesn't improve drastically, from what the initial estimates were, then yeah, I can see this going up. And that would probably push DBC up, probably also pushing up TIP, TLT. So it's all connected. Okay, all of this is all connected. So, just like I said that in early June, I said, oh, grains may be moving the bond market. We may be, and that never played out because, the commitment from the farmers ended up, planting that corn. So it ended up being okay. But I now see that scenario as, again, being a possibility going forward. We might see grains affecting the bond market. So we'll see. Again, if that happens, we could see, especially TNX spike up. We could see TNX spike up. We could also see TIP spike up as well too. So that's something to monitor, and I'll let you guys know once I get those reports. TNX 10-year Treasury is going up. All right, TIP, TLT going up, and TNX going up like this is definitely headwind for the triple Q or the NASDAQ. Okay, definitely some headwinds. So that's why we're seeing right now the NASDAQ down about 1.5%. Small caps are down about 2%, and the S&P 500 as a whole is down about 0.9%. Dow Jones is down about 0.7%. Dow Jones tends to do the best during inflationary times. They don't have as much growth priced into their stocks. And again, as inflation goes up and interest rates go up, future growth is just not worth as much as current gains. And usually it's your industrials, it's your blue chips that have the current gains, and that's your those are your Dow stocks. All right, so as TIP, TLT goes up, and as TNX, the 10-year Treasury rate, goes up, we could probably expect to see value stocks outperforming tech stocks now. Okay, so keep that in mind as you guys trade. I know some of you are active in equities, so keep that in mind. Let's actually take a look at what is going on with IVE. Oh yeah, so it is flattening out. We saw that this chart, which is growth over value, we saw it going up, and up, but now we're seeing it kind of flatten. Will we see it come down? Maybe. Okay, maybe. We shall see. All right, We shall see. One thing that is very important for the Dow is also this, the 10 and 2. It's actually funny though, bank stocks have been rallying for the last couple of weeks, but we haven't seen any recovery in the spread between the 10 and 2 year. All right, the 10 and 2 year spread is directly correlated with the profitability of loans for banks. Okay, as this goes down, loans just are not as profitable. All right, you want this as steep as possible going up for banks to be really able to profit on their loan spreads. Okay, that's not what we're seeing though. However, XLF did rally in the past couple of weeks. Although right now, oh, did it rally again today? I'm surprised. It is. It's rallying today, huh? It's giving up some of its gains, but no, it's not. No, it's not. No, it's not. It's not rallying. It's above its close. That's all it is. I thought that was a plus sign. No, it's not. So it is down. It's down about 1%. Okay. So, but I mean, it did go up while the 10 and 2 was inverted. Okay. It's not as strong as tech, obviously. Tech has done way better, and we predicted that, based on the IVW IVE ratio chart. But if this goes down, and which I do think it does, I think the Dow will follow. It'll fall just like the rest of the indices. All right. So that's what I'm seeing in interest rates. Really, though, TIP, TLT, this is really what you want to look at. This is what all the pros are looking at right now. If this starts going up, that inflation expectation is going to go up. All right. And I think a lot of this also has to do with the reaction earlier today. If you actually look at where a lot of the futures selling happened in the overnight market, it actually happened as Europe opened. As the pre-market in the UK started, that's when we started seeing selling. And then once the UK announced their inflation, their CPI numbers just came out. Their CPI numbers came out worse than expected, way worse than expected, worse than the month prior. It went from last month it was 9.4%. Now it's at 10.1 annualized for their headline CPI numbers. And the selling just went from Europe to US like that, like in a snap. It just went. I was looking at that. It was around like 3-4 in the morning in New York City when that happened. And so those CPI numbers generally, right now, I guess there's a worry. Well, what if our CPI numbers come out worse than last month's or worse than expected, which I guess is a possibility. And look at this. The market is telling us, yeah, there is a chance for that. And especially if this goes up. If this goes up and starts making new highs, the Fed will notice. Okay, the Fed will probably have to get more hawkish. Again, everybody thinks the market reacts to the Fed. It's the other way around. The Fed reacts to the market. All right, and look at that, 50-50. We are 50-50 now. Okay, that's interesting. Look at that. So 50 basis point rate hike versus 75, right there. Okay, we were teetering 60-40, sometimes 60-40 one way, 60-40 the other. Now we're at 50-50. Okay, and then afterwards, after that first either 50 or 75 basis point hike, we're going to do another 25 or 50 basis point hike in November, it looks like, or at least that's what the market is pricing in. And topping out at 350, 375 for the year. And look at that. Oh, this is increasing the chance of a 4. Oh, wow. So now the market is pricing in another rate hike in 2023. A rate hike and then a rate cut in the summer. Very interesting. That's extremely interesting. Okay, so it's the market is now starting to price in a more hawkish Fed. Okay. That's what this is. It just literally just happened. It just happened now. Before I looked at this, it wasn't like this. I looked at it about a couple hours ago. This just updated about an hour ago. Okay. So yeah, so now we have a 50-50 chance of a 50 basis point rate hike or a 75 basis point rate hike, another 25 or 50 basis points for the rest of the year, and then one rate hike in the beginning of the year, followed by one rate cut in summer. That is right now the trajectory of, I think, what the market is pricing in. Okay, so the market's expectation is getting more hawkish. And so, of course, that is going to put a pressure on risk assets. All right. So our puts are doing pretty well today, recovering very well, actually. So we'll see what happens. All right. So let's take a look at some of our other indicators. Let's see here. The 30 and 10 coming back down. So with a more aggressive Fed, we can expect them to raise interest rates, slowing down the economy even further. I think, okay, if the Fed funds rate starts venturing into fours, if the market starts pricing in higher than 4 before the end of the year, I do think we see fresh lows. We're probably going to break our lows, okay? So I think you got to have that possibility open in your mind. Okay, you have to be ready for that. I think you have to be ready for that. It is it's a good enough chance now where we have to start considering that. Okay. ZF, I told you guys, hey, if this goes down, dash for cash. If this goes up, cash is trash, right? We're seeing dash for cash. Let's see what the dollar is doing. The dollar is up. I know the dollar is up. I've been looking at this dollar. We're above that 18-day moving average, guys. Okay, we're in an uptrend in the dollar again. All right, as anticipated, I said it's very possible that the 2 standard deviation Bollinger Band stops the fall, and lo and behold, it did, because it stopped it right here. It stopped it right here. It stopped it here too. Remember, I talked about this back in early August. All right, so it seems to respect this 2 standard deviation Bollinger Band length 18 on the downside. Okay, the big trend is still up in the dollar. We're still seeing dash for cash. All right, euro coming down. This is not good for Eurozone stocks. All right. Well, it's not a good indicator. If this keeps going down, that just means that there's going to be some more economic problems in Germany, which is the economic powerhouse for the Eurozone. All right. Australian dollar, this is also a risk-on currency, breaking down. Okay. So if this is coming down, that is usually not a good sign for metals. It's also not a good sign for China. All right. Not a good sign for Taiwan either. Taiwan and China are very, very much correlated in their markets. And they're also very correlated to the Australian dollar. All right. So Australian dollar coming down like this, not good for China. China did have some really bad economic numbers come out in the past few sessions. They did have lower than expected retail numbers as well as industrial output numbers. So China, the People's Bank of China did have to loosen, and they dropped certain lending facilities, the rates on certain lending facilities. So, and that, that caused the overseas CNH rate, their currency rate to go down against the dollar. So we'll see what happens with that. I still have those EWT puts, the Taiwan ETF puts. We'll see what happens. Actually, I'm curious. What about TSM? What's TSM doing? Oh, yeah, TSM is down. So, I mean, if the rest of the market, if risk off happens, it could go down to 75 or so. Definitely. That's definitely a possibility. All right. Some of the other commodities, feeder cattle, I mean, at their highs, it still keeps just going up and up and up. Okay, how's Tyson doing? Tyson is falling with the market. PPC. Oh, PPC getting ever so close. Oh my goodness. Uh, I have an alert set at 2140. 2940. Oh, so my alert probably went off. Okay. I know the Bollinger Band. Hold on. I gotta see now. Yeah, it's not there yet. It's not there yet. I really wanted to touch that 2 standard deviation Bollinger Band, because it sometimes does touch that, especially here. Well, this one don't the one in this was news driven. This was because one of the takeover bids failed, but see here, sometimes it plays around on this line a little bit, and then it will fall and use this as a crutch. It may ride it for a few days. Here it also happened too. So that's what I'm waiting on. I'm going to start legging in once it hits that 2 standard deviation Bollinger Band. So I'm going to have to put another alert. I had my alert right around 2940. So I'll put it now right here. But I do want it to touch that. I think it can touch that, especially if the market sells off. This could ride down a little bit. We may even get into like the 28s, 27s. But so my buying target for this, for PPC, is a moving target. It moves with that 2 standard deviation Bollinger Band. So keep that in mind, guys. Okay. But yeah, that's the commodity plays I see. I think a lot of these commodity costs are going to drive the bond market, and the bond market is going to give us those liquidity signals for risk assets. Okay. Let's take a look at some cryptos now. I know a lot of you guys are interested in cryptos as well too. Let's just see what's going on here. My bookmarks, H&H. Yeah, let's do it. All right, still maintaining that high notional value, I see. Retail trades, or small trades at least, beating out big block trades. Whereas calls are still dominating. What's going on? August. Okay, so we're getting shorter dated. This is retail. It looks like retail. Retail is participating again. Getting into calls. Calls and puts. Oh, interesting. Regular screen trades. Calls are still dominating, but a little bit more even. What are the dates? 1900 calls for the 18th, 19th. Wow, that's this week. So they're looking at this week, 18, 19, 18th and 19th. Wow, 18th and 19th, 1900 calls, 2000 calls, 1950, 1900, 1950, 2000. Huh. Okay. So that seems to be very close stated. Let's actually take a look and see what's going on. Let's 18th. Wow. No. That's not it. I forget. Deribit, always make sure you redo this. Okay. 19. Wow. So there is a lot of volume. Let's look at. I actually want to look at if there was any big common themes. Oops. I think I chose the wrong one again, right? Yep. I have so many bookmarks. I gotta clean this up. Are there any particular trades in general that catch my eye? No, these are pretty low dollar amounts actually. So the big block trades are stopping. We saw those huge block trades. I mean, I think it's fair to say it looks like we're seeing buying happening. It looks like we're seeing some buying happening here. Okay, I'll have to confirm that. There's another site. I forgot what it is. I don't know if I saved it or not, but I'll look for it. But we're seeing a lot of activity in the closer dated calls. I know. Oh, later today we do have FOMC, so maybe it's that. Maybe they're betting on that. Maybe they're betting that the volatility will drop and risk assets will have a day. Not sure. I'm not sure if that's the case. Looks like, since it's out the money like this, I think it's a lot of call gambling happening. Okay, so if those people, if all that call chasing doesn't work out, and those deltas drop, the market maker will have to dump the underlying. So we might see further selling in the next couple of days. We'll see what happens. Okay. But that's what I see so far. Nothing too major is happening. Most of the moves that I'm noticing are in the bond and currency markets. Okay, so right now the bond, currency, and commodities. Those three things are, I think, what everybody is looking at and what everybody is worried about. Okay, and they are all connected. Okay, as commodity prices go up, it's pushing up the inflation expectations, which is also pushing up expectations for a more hawkish Fed, which drives up yields, also drives up the dollar. Okay. And I think we're seeing that, especially with emerging markets. If we take a look at the emerging market ETF, CEW, again, one of our indicators we used to use before for our trade in EEM. As you can see, CEW it looks like it's topping out and it's coming back down. And so that's one thing I've noticed is that a lot of emerging markets, they're buying up the dollar. I think they're already feeling the pain of this high dollar, and they're trying to buy dollars at whatever cost right now. So that they can, buy commodities, they can conduct trade. So at some point, though, that pain becomes too big. And that's when we're going to see that emerging market liquidity crisis. We're already starting to see the setup for that now, okay? But it may take a few months to really manifest itself. So I think around 2023. This is something we've been anticipating also since June as well, too. But I think we were just a few months too soon, all right? But that will be the trade. That will be a coming up trade that we do, is shorting EEM. But so far, not yet. I'm not seeing that clear signal yet, all right? We'll see. We'll see what happens, okay? Any questions? Anything you guys want to look at before I go over our... somebody wrote something on our Discord. XLF looks like a ways above the... yeah, XLF puts. I mean, yeah, that's not a bad... if it wasn't for... I'm already in a lot of these puts. You know my position. You've been following along High Noon Highlights, so I know you know what my positions are. But yeah, I already have Dow Jones exposure with puts, but XLF I think is a fine put to buy too, especially with this 10 and 2. I think it's sound. It's a sound strategy to buy that, especially with the 10 and 2 this inverted. Especially if you're bearish, of course, that's only if you're feeling bearish about the market. But yeah, XLF definitely, it's a good candidate. It's gone up a lot. Its IV is relatively low because it's an index, and I think you can get some puts for cheap. Yeah. Any questions? Any other comments? Anything else you guys want to look at? Anything else? Okay, in that case, as is tradition, here at High Noon Highlights at the very end, I like to go over our current positions, the current indicators that we're looking at, and also the current trade plan. Okay, let's start with our most important indicators. Okay, New York high low. All right, from what it looks like right now, it does look like we're going to be either flat on the high low, or even maybe we might even venture into the negatives. We saw the first setup. The first moving average went above the second. The 4 EMA went above the 9 EMA. Of course, I said it's not really a positive signal unless we curl up over all moving averages, including the 20. That hasn't happened yet all year. Okay, so if it comes back down, well, then we start seeing a pattern like we saw in like April, in March, April. Okay. So that means the bear market's not over. If we don't see that curl up, it means the bear market's continuing. Okay. So that's why I've been saying for the past few weeks, ever since June, I've been saying I'm neutral with a slight bearish bias. Okay. I've been saying that throughout this whole bear market rally. All right. And this is the reason why. Okay. Another thing, corporate bonds. This is something that I posted last night. I said this is a very important indicator for risk assets as well. We were very close in putting in a bullish signal on our corporate bond AD line, okay? If it was a positive 25 yesterday, that would have put us at a higher high on the junk bonds AD line that was made on the higher last high was made on June 2nd. So we would have been above that if it was plus 25. Instead, we got negative 198, so it pushes it back down. With HYG down about 0.5% or more, that would probably mean that we still keep going down. So 2 or 3 more days of that means we made a lower high, which means bear market continues, okay? So HYG right now, if I go back to our charts, all right, HYG right now is falling, all right? And I think if HYG closes under like 77.95, I think that is a bearish signal, okay? We're going to start seeing the liquidity sensitive parts of the market underperforming, which means triple Q and IWM. Triple Q and IWM will underperform if we, I think, close under this 77.95 for the day, okay? TIP, TLT, I can't stress this enough. I don't know how many times I talked about this today in the last few days. This has been our leading indicator. CPI, PPI, all those numbers, those are 3 months. They look 3 months back, all right? TIP, TLT is forward looking, all right? This is what we're using right here, all right? This is what we're using, all right? So I think that goes up. If DBC and the rest of the commodity space goes up too, then well, yeah, we could see this breakout really sustain, and I think it's tracking DBC. Last week I said it was tracking gasoline, but I think DBC is it's an indicator of the indicator. It indicates where TIP, TLT may go. I think it leads it just by like a couple sessions, actually, in some instances. So I'm going to use DBC as my comparison to TIP, TLT, and kind of as a lie detector test for TIP, TLT. All right. So that's what I see. ZF, also another indicator. I told you guys, if this goes down, dash for cash. If this goes up, trash is cash. If this is going down, risk off. If this is going up, risk on. So, we are seeing the dollar going up. It is over its 18-day moving average. Will we see it come back to its highs here? Definitely possibility. And if that does, more headwinds for indices, more headwinds for risk assets. Anything priced in dollars will most likely take a hit. Most risk assets will take a hit if the dollar keeps going up like this. All right. Euro USD. This is a risk on currency. If this is coming down, it's going to be risk off. All right. So just keep that in mind. Those are some of the indicators that I'm looking at. All right. The plan, nothing has changed for our crypto plan. Again, ETH, I'll get into ETH, when we get to around that 1200 level or so. Around that 1200 level or so, I might start venturing in, especially if if our ETH to gold chart gets to that red line by that point. If it gets to our red, trading view always cuts my lines, but they always take out my lines. But I had a red line going here between the ETH and gold ratio, and if it hits there around that 0.6 or so, I think ETH will probably be around 1100 to 1200 at that point, and that's where I'm going to start nibbling long on Ethereum. So that hasn't changed. Okay, HUT. It is coming back down. I do have some shares. I have some covered calls on this. So I do invite a little bit more down movement so that I can get out of those covered calls and buy some more shares. I have an alert at 165. I will start buying more at 165. Also, Ford also coming back down, although very slightly. I want to see a major pullback here, 1380 or so. That would be a good entrance for me. Still part of the plan. PPC getting ever so closer to our buy level. I do want that 2 standard deviation Bollinger Band. Right now, that 2 standard deviation Bollinger Band is at 2887. Okay, so that is where I'm going to start nibbling long on PPC as well. Okay, SPY and the indices. Okay, I'm not going to do any more put buying. What I will do is I will start buying once we get to, so either we get to our lows of 360 or I see our Moab signal, the mother of all by the dips. Okay, which I'm not seeing yet. Okay, the mother of all by the dips would be if we saw the New York high-low line. Remember, going up over that 20-day moving average, and then making a higher low, as well as our junk bonds AD line making a higher low, a higher high, as the market drops. We're not seeing that. It can't even make a higher high yet. Okay, the junk bonds AD line, I just went over that, can't even make a higher high. New York high-low line, cumulative, it can't even get over its last moving average. So we're nowhere close to that yet. All right, we're still weeks away if that even happens at all. All right, so either we get that signal or I start buying in at 361. I will start buying even more shares of SPY at around 341. 341, 344 or so, and if it goes under 340, I will be buying in the money calls for about a year out on SPY. Okay, the current positions and that I still have my UVXY call spreads of 14.24 long the 14, short the 24 calls. Also the 15.20 call vertical debits, long the 15, short the 20. I'm still in the QQQ put vertical spreads for November. I'm in the November 305, 295 put verticals, long the 305, short the 295 for November. Okay, IWM, I'm still in the 180, 170 put vertical debit spreads, long the 180, short the 170 for both the November and the October expirations. All right, nothing has changed. Nothing has changed. Okay. One position, though, that did change, that I didn't even realize until this morning that it actually went through, was actually on the Eurozone spreads. I'm still in the spreads, the 32.27. However, yesterday, I had some stink bids. I call them stink bids because they're just like low, really, really low bids that have a really low chance of hitting. So I had an order to buy back 27 puts at 25. No, it was at 20 or 25 or something like that, and it triggered. It triggered only a partial of them. I think it got in just under 25. It was like it got in at like 24, 23 or something like that. I had some orders in there, and it filled a partial. So part of my 32 puts that I'm long on are naked. Okay, so if this really drops, I can stand to recoup more of my losses and possibly, you know, profit even more. So I still have a few short 27s, but not as much. More than half are now just long 32 just on their own, and then I have a few the 32, 27 put verticals. Okay, so but I'm still mainly in the position. I'm still short on the eurozone. ETF. I did not lessen my position. It's not like my position got smaller. If anything, my position actually got more delta to the negative exposure. So I now have more delta exposure on the downside because of that. So it's almost like I got even more bearish on Europe. Okay, but it was a stink bid and it just went through. I didn't even notice it until this morning. I think it went through yesterday. But anyway, back to the current positions. EWT, Taiwan, December's 49.40, long the 49, short the 40. I'm still in those put vertical debit spreads. DIA, Dow Jones Industrial Average, of course, I'm still in it. I'm still in the October 300 and 290 vertical debit spread. Long the 300, short the 290. Boom. That is all of it. All right. Positions, indicators, trade plan, checkmate trading. Any questions, comments, rude remarks? Anything else you guys want to look at? All right. Well, in that case, that concludes High Noon Highlights. We will be back on, as always, tomorrow, Thursday at noon Eastern Time for tomorrow's episode. We'll recap what's going on for the week. We'll also take a look at, a lot of the similar data. We'll monitor this data on a daily basis. If you guys have any questions, let me know. Hit me up on the Discord. If you guys are joining us on YouTube and Twitch, hey, join our Discord. We have discussions like this with different topics and other traders with different styles. We have this around the clock. We would love to, have you join our Discord as well. See you guys tomorrow. Trade safe. We do have that FOMC minutes coming out at 2 p.m. today. So watch out for that. If you guys have short dated options that you guys have profits in, hey, not a bad idea to take some money off the table and manage some risk. All right. Have a wonderful day, guys. I'll see you guys tomorrow.